What's good, guys? SPY once again down today, and we have another bearish pattern that's setting up on the S&P 500 futures, making it look like in the next couple of days we could see SPY down at about $5,000, which would bring SPY down to 500 bucks. And the market moves in a very structured manner. You guys can see that each and every single time that we've been trading over this market bias and taking out higher highs, we've been continuing in this trend. Ever since we broke below back on Monday, April 1st, you're going to see that we've been taking out lower lows each and every single time, waiting for retracements back up, selling off into a lower low, waiting for a retracement back up. For those of you who are fib traders, you know that each and every single one of these is right to that golden zone. This is a perfect way to short. Each and every single one of these would have been perfect. So the market is moving in a very structured manner up the downside. And now we're coming back up a couple of days ago to test this area of 5,200, couldn't hold, sold back off. So once again, we are breaking this support level, structure is being broken, and 80% of the time, which doesn't mean it always has to happen, but 80% of the time, we will sell off into a lower low, which is going to be another 1% sell-off. Now, there's a very high chance that this just happens tomorrow because the market has not really been able to find its footing as far as a bottom. But what I think is more realistic that's going to happen is we are going to see SPY probably bounce tomorrow and move back up to test the middle of this market bias. As you can see, if we take swing high down to swing low, that would give us probably, because our 0.5 fib will be sitting somewhere around here, I just don't have it turned on, but that would give us a very nice time to look to go short once again. So for me to actually put money on this, because we are sold off so aggressively and the 4-hour is no longer in an expansion, I would need to see SPY futures push back up to 5,100, set my stop loss here at about 5,140, and then set my take profit down at a lower low at 5,000, which would give us a 2.78 or really a 3-to-1 risk versus reward. Now, if we turn on the daily chart, you're going to see that the same exact setup, the same situation is happening here to the downside, and this is looking really good. The only issue here is that we're a little too far away from the market bias for me to just go short here. This has been a strong support. So this is saying the same type of situation, right? If we were to take fib from swing high to swing low, you're gonna see that this could even give us a bounce back up to test 5,153 and 5,175. So because the S&P 500 is no longer in an uptrend, right? We're no longer above market bias on the daily. We're no longer above market bias on the 4-hour. And so because of that, I'm not going to be trading long. But in this instance here, I'm not going to just go short because the risk versus reward is not worth it at this moment. I would rather see a push back up, 1% over the next couple of days, let a relief rally happen, and then from there, we'll look to go short. If you guys want to trade with me each and every single day, get access to all the indicators you see here with our proprietary settings, access to each and every single one of my trades as soon as I take them, go ahead and check out our Discord community down below. These are our returns year to date. You can see that we have not had a good past couple of days. Yesterday was really bad, but overall, we focus heavily on trading a very easy to execute system, which you see here, and really relying on the law of averages and just trading with the trend. I hope this video helps, guys, and I plan to see you in the community. Peace.